Before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Dubai Electricity and Water Authority has announced a 13.8 billion dirham budget for 2013, compared to a 13.6 billion budget in 2012. According to news agency WAM, Saeed Mohammed Al Tayyer, the managing director and CEO of DEWA, was quoted as saying that the budget includes 12.508 billion dirhams for operating budget and 1.206 billion for capital projects and capital purchases. 204 million dirhams will be for 132 kV cable laying circuits at various locations in Dubai and other works for electricity transmission systems, in addition to 52 million dirhams for the installation of distribution substation equipment and low voltage cables. He added that 281 million will be for developing water transmission and distribution networks, while 120.351 million dirhams will be allocated as administration capital budget. The UAE's Purchasing Managers Index rose to 55.6 in December, the strongest reading since June 2011, highlighting a strong expansion in the non-oil private sector. According to Emirates MBD research, the main driver appears to be improving domestic demand in the UAE, as total new orders rose to 63.2, the highest level on record, while new export orders expanded more modestly at 56.1. Additionally, the most positive aspect of last quarter's data is that domestic demand in the UAE appears to be recovering well, even in the absence of the substantial fiscal stimulus that has boosted demand in Saudi Arabia.
Well, what's been really encouraging is that most of the increase in new orders seems to be driven by domestic demand rather than export demand. So that suggests that consumers in the UAE are becoming increasingly confident and they're willing to go out and spend more, businesses are willing to invest more, and that's helping to boost total consumer and investor demand. So, it means that the growth that's we're seeing in the non-oil sector isn't coming necessarily from the government. It's coming actually from the private sector itself, and that's very, very encouraging in terms of the outlook for next year. Well, public spending in the UAE has actually been fairly constrained, especially when you compare it to some of our neighboring countries that have really gone, all out in terms of fiscal stimulus. The UAE has actually been quite conservative in terms of budget spending. So what's encouraging for us is that even in the absence of government spending, there seems to be an improvement in demand, and that could be attributed to improving employment prospects, general improvement in consumer confidence, the fact that the tourism and hospitality sector is recovering quite strongly, as is the real estate sector. So all of those things generally are making people more confident and willing to go out and spend more and invest more. So all of those things will be driving aggregate domestic demand in the UAE.
The world will consume 540 million tonnes of plastic over the next 7 years. That's according to organisers of the 11th Arab International Plastics and Rubber Industry Trade Show Conference, which is scheduled to take place from the 7th to the 10th of January. In comparison to Europe with 25%, the GCC region's plastics consumption is set to grow 8% by 2020. The Gulf states are heading in the right direction to become the #1 source of petrochemicals and plastics products by 2020, says Satish Khanna, the head of the organising committee. Commenting on how the industry has developed over the years, Khanna stated that in 1960, consumption stood at 7 million tonnes, 260 million tonnes in 2007, and expects growth of over 365 million tonnes in 2015. the petrochemical industry has become a major investment opportunity for the region, as they are set to become the world's largest source of polyethylene and polypropylene.
GCC petrochemical industry is the hub. It's the biggest supplier to the world raw material market. It is, you have, because of oil-based economy, you have the biggest chunk of petrochemical producers in this part of the world.